Mayuresh Joshi as well joins us of Angel Broking. Mayuresh, we talk about banks. Let's talk about Kotak Mahindra Bank. We believe ING has executed its block deal on Kotak Mahindra Bank at 1130. But I believe the overhang is still not done with because we will still have Uday Kotak who will have to reduce his stake in the bank in the near term. How would you approach Kotak? Is it a buy? Is it best avoided? What's the trade?
No, Samina, so I think you're right. In terms of the existing shareholding pattern and what probably happens with Mr. Uday Kotak's stake sale, I think that is probably going to be an overhang on the stock. But again, I think at the end of the day, if you look at the qualitative parameters that the bank has been exhibiting, very, very strong loan growth, deposit growth has been equally strong. And when you're probably looking at the other parameters, specifically after the ING merger, I think the asset quality issues are well behind them now. So I think it's about how you're trying to value the stock in terms of the book. But the book itself looks very, very strong and very nicely poised to accelerate even from an adequacy point of view. So I think capital adequacy remains strong to fuel balance sheet expansion. The other parts of their business are also doing pretty well. So yes, from a fundamental perspective, from a quality perspective, I think the franchise has all the things that is needed to drive growth. But the stake sale might just create an overhang from a short to medium term perspective. But our call is probably that any investors are holding on should probably hold on to the stock.
Alright, Kotak Mahindra Bank, in fact, we will talk a little more on the technicals of this purely because of that oversupply concern that is persistent on this, because as Samina said, regardless of ING selling stake, and it is a big stake sale in ING worth almost $1 billion over there, Uday Kotak has to massively reduce his stake. Now whether that's via stake sale or whether that's via an M&A, we don't know, but the timeline is very short. Next 6 weeks is when he has to bring his stake down as per the RBI mandated guidelines. Whether it will be possible in that time horizon not is also an unknown, but we'll keep a close eye on that.
Mayuresh, what are you doing with auto? I know till a few weeks or maybe even last series, stocks like Maruti, people were talking about levels of 6,300 on the counter, and of course it didn't even look attractive when the stock was at 6,500, and now we're back at levels of 7,300, and for some reason euphoria is returning back to the counter. Being a fundamental analyst, have you changed your mind on Maruti? Because at 6,300 no one wanted to pick it up. At 7,300 the positive bias continues.
That's how the markets behave, Samina. So large element on how the performance specifically in terms of volume numbers have panned out for Maruti or the general auto pack. I think they have been on the softer side. So what we've probably also seen over the past 2 months in terms of weaker volume numbers, the expectations of realizations not improving that much, the element of discounting probably still remaining in the system. And to add to that, again, I think the inventory level at the dealer network. So I think all these factors are probably working out. And there were a few key variables which all of us are cognizant about. So higher crude prices have obviously cooled off over the past few days. What you've probably seen in terms of ownership costs with higher insurance costs expected to go through. So I think that was something which was creating some amount of doubt in the purchasers' minds. But again, I think our own sense is that it should come back to normalization levels, both in terms of how the inventory levels will be at the dealer end and how demand will probably pan out over the next few quarters. So as that happens and as you probably start reverting back to mean, you're probably expected to see the leverage probably play out on the balance sheet. Input cost pressures obviously have also played trons. So I think you've probably seen some amount of hikes happen, whether it's two-wheeler or certain models within the four-wheeler space. So again, I think autos as a space over the medium to longer term still looks very, very attractive, and Maruti had corrected to those levels of 65, 66, 67 or 100. I think it was very, very attractive from a valuation perspective. So yes, I think the positive bias probably stays on a Maruti, probably a Hero MotoCorp from the two-wheeler space as well.
Tata Power, Mayuresh, what's the call on this one? You would have read about the deal looking to acquire Prayagraj Power for about 6,000 crore rupees through one of their units. What's the sense of the deal and, of course, what it means for the stock?
So there are two elements here, Dipanshu. One is obviously how the deal is expected to go through and how the deal is going to be sufficed in terms of the debt equity contribution. On the other hand, what you're probably hearing in terms of what can probably come through in terms of the pass-through of prices, specifically for its power plant. And I think even if the under-recovery there is almost around 92 paise per kilowatt hour, if that comes down by a certain proportion, I think the kind of losses that Tata Power is probably making on that plant, I think that comes down significantly. Now the company is trying to mitigate a lot of these issues by blending coal. They're already achieved 30-odd%. They're probably trying to take it up to 40-45-odd% over the next few quarters. So that does reduce the cost element as well. So to that bit again, I think the strain on cash flow.
Mayuresh, in fact, let's get some more answers to that. The management of Tata Power has joined. Mayuresh, anything at your end, something you would like to recommend to the viewers?
So I think the insurance space, the bunch looks very, very interesting at this point of time. So SBI Life is something that I believe on any decline, long-term investors can probably look at the stock. The value of new business is improving at a very fast clip, both because of the bank insurance model that it possesses and the extensive network of SBI that is at its behest. At the same time, I think the APE collections, specifically on the individual part, have been very, very robust and strong. And that is appropriately getting reflected both in terms of premium collections and the VNB. So the VNB margins are also getting equally strong. And the part of the protection business is actually improving. So if that improves to 8-9%, you've got a better product mix over the next few quarters. And that should also entice and ensure that both the VNB in terms of core collections as well as the VNB margins remain extremely stable. So persistency ratios are quite there at 58-59%, which is very, very reasonable. The solvency ratio is probably right there at the top end. So again, I think nothing to complain in terms of the franchise that it possesses, and there is a huge amount of scope and opportunity for a strong earnings momentum. So I think SBI Life on any decline is something that I prefer for long-term investors.
Right. Yes Bank continues to be the big sell-off in trade this morning. Himain, of course, had indicated that the counter was showing signs of weakness. Himain, Dhyaneshwar, Jay and Gaurav, thanks a ton for joining in this morning. That's the word coming in the markets. The Nifty itself is trading flat. 10,575 is what we have. Bank Nifty also trading the negative bias. The broader markets have slipped too. So that could mean that we could see some weakness on the street, but I'd imagine it should be a morning of consolidation, and it wouldn't surprise me if I actually turn negative in the second half of this session again.